ICTSI enters 2026 with momentum few competitors can match. Last year's figures weren't just impressive, they were decisive. Double-digit throughput growth, high 60s EBITDA margins, and nearly $1.81 billion in operating cash flow. These are the fundamentals that underpin both ambitious expansion and robust shareholder payouts. But headlines now pivot from performance to capital allocation. ICTSI has declared a notably higher cash dividend for 2026, 17.85 pesos per share, up 26% from last year's payout. Management's confidence is unmistakable. This isn't just a reward, it's a signal, marking faith in durable cash generation, even as new projects demand capital. Underneath this payout, strong operations continue. Throughput surged to 14.5 million TEUs in 2025, with every geographic region contributing to growth. Gross revenues from port operations climbed to $3.23 billion. EBITDA hit $2.14 billion, and net income reached $1.05 billion. But what sets ICTSI apart is its geographic diversification. Foreign terminals accounted for nearly 70% of income, while Asia, Americas, and EMEA each maintained a balanced share. This global footprint acts as a shield, protecting the company from isolated risks and regulatory shocks. Turning to cash flow, the engine remained powerful, $1.81 billion from operations. Yet reinvestment surged, with over $1.25 billion spent on acquisitions and expansion, and Durban's takeover marking a strategic leap. As 2026 capital expenditures approach $740 million, investors will watch the debt ratio closely, currently a reasonable 1.27x, but rising commitments elevate scrutiny. The global backdrop, however, is less predictable. Fresh Middle East tensions threaten to reshape shipping routes, lengthen voyages, and drive up logistics costs. ICTSI could benefit selectively. Supply chain disruptions often generate ancillary revenues and can boost gateway utilization, especially with Africa routing, now more relevant after the Durban integration. Yet, these advantages may be offset by trade volume pressures and operational volatility, particularly in sensitive geographies. The bull case is clear. ICTSI combines strong earnings, resilient margins, and a diversified base, now paired with a materially bigger dividend. Yet, expectations are rising. The market will demand proof that ICTSI can sustain reliability, convert volatility into opportunity, and deliver on both growth and shareholder returns. In 2026, the burden and the opportunity are greater than ever.